This was my main source of income. I didn't have any other source of income. And so for me, I would rather take a profit and play around with the risk reward ratio. My average win ratio is 70%. That is skewed by the fact that I do take partial profits. But at the end of the day, you need to pay the rent, you need to put food on the table from money in the bank. And there's nothing more depressing than being 100 pips up, $1,000 up, and suddenly waking up the next morning and you've lost.
Sitting down today with Marc Walton once again. We had him on the podcast I think it's been a few years back, Marc. Good to have you back again. Good to talk trading with you. And looking forward to discuss and see what you're up to.
Lots of things, actually. I don't just trade Forex these days. I invest in crypto. I don't use leverage, but I also got into gold and silver a couple of years ago, and some stocks as well. And it's all using the same strategy. So the great thing is it's interchangeable. And if on like a day like today, as we're recording this, Bitcoin's just dropped below 80,000. And I bought some Bitcoin this morning. And then the stock market's all over the place because of Trump. And Forex is tricky today because, again, with Trump, ever since Trump came in, it's the same as last time he was in. He just has this habit of throwing a hand grenade in the room and then just waiting to see what happens. And so every day we're getting another piece of chaos. And I think as a result of which folks need to be very careful. But if you can trade, and with a lot of the brokers nowadays as well, of course, you've got lots of different things that you can trade. And so if you see that one sector, today Forex is tricky and another one looks easier, then move around. So I'm becoming a lot more flexible. And if you pick the right market at the right time. I got into crypto in 2020, which was perfect time as Bitcoin was $8,000. And then I got into gold when it was 1,800 in 2022. So it's really trying to catch cycles all the time as well. But as I say, the beauty is it's the same thing I do all the way through. But I think with the Trump presidency now, folks need to be more careful. And I have a very systematic approach to how I do things. So I can share that in a while. And basically I say to people, especially if they're new, you don't take a trade unless you've got at least 5 reasons to take it, and pick strong areas because I say it can flip in a heartbeat. So, and apart from that, we've been traveling a lot. We went around Europe last year. We went to Italy for a few months and England for a few months, and hopefully coming down your neck of the woods later this year. So semi-retired now. And the original podcast we did at the time was all about the great thing about this business. It gives you the freedom to be able to live wherever you want, and it gives you the freedom to travel and yet still make an income. So all good.
Definitely, we have a lot to cover for sure. Tell me more about how do you adapt in this current market? Like, how would a trader adapt in this? Do they just have to kind of trade the same thing they trade but in different conditions, different market? Or do they have to learn something new or reinvent themselves? Or how would they look into this?
I think all traders need to be able to adjust. I think ultimately I've rarely seen any EAs or robots work long time, because the problem is unless you've got somebody actively intervening and saying, well, look, the market pattern's changed, then most of them will blow up. The vast majority of them will blow up. Whereas as a human, we can see things and say, well, hang on a minute. And we're just currently been going through this phase since Trump came to the presidency a month ago with I use the dollar index as a barometer as to what's happening and what's going on. And the dollar index was being easy for 4 or 5 months because it was just going up. So in that environment, all a trader needs to do is buy on a pullback or buy on a breakout. Now, the last month, and particularly this week, it's just been sideways and no clarity. And I just had a session with a private client this morning and just said, look, he's trying to pick trades that are going to go hundreds and hundreds of pips. And at the moment, I think that's been way too optimistic. So for me, what I say to folks is, look, once you've doubled your risk, so if you take a trade with a 50 pip stop and it gets 100 pips in profit, take some profit out. It does skew with the risk reward, but then you're in an environment where, okay, you say, and depending on how keen I am that this thing's going to keep going, I might only take 50% off and then move the stock nearer to current price and let the balance run. And then when it moves a bit further, I might take a bit more off. If I am trading something like, I think I was in the EuroCAD yesterday with a client, and he had a very optimistic target. And I said, look to the left, always look to the left. And you could see that there were previous major support and resistance areas going back years where price had rejected. So all ultimately we trade all the time is probability. And I said, the probability is this thing is going to bounce. I would take 80% off. And the other thing folks have to think about when they're in a trade, if you're 100 pips in profit and you're just trying to squeeze another 20 or 30 out, would you take that trade now where it is? And most times no. And would you risk 100 to make 20 or 30? That's an insane risk reward. So I think the main thing is the message, certainly until things calm down, be selective about which markets to focus on which day. I start every day. I use TradingView I look at where the dollar index is. I look where the NASDAQ and the S&P, where gold is, where silver is, because I'm trying to work out every day where the big money's flowing. And this morning when I go up, Bitcoin's dropped below 80,000. The S&P was being down all week, as has the NASDAQ, but the dollar's going up because money is flowing into the dollar. And as people sell assets and get out of the stock market, that goes back into the dollar. So now, today, I've said to folks, don't be in a rush to short the dollar today because all we can see everywhere is dollar strength. And then the other thing is I used to trade London, and London used to be easy, and it changed 10 years ago. Until then, there was a 10-year run from about 2005 to 2015. The London breakout, everybody had a London breakout method because during the Asian session, price would go to sleep. And the pound, for example, used to do 150 pips a day. And overnight in the Asian session, it could do 20. So it was a 50-50 bet. It was going to go up or down. It had to go somewhere. And you just placed one cancels the other order above and below. And it really was easy to make money. But then it stopped because nowadays the range can be 60 pips. The Asian session's a lot busier. And again, they say Japanese traders are now more active overnight as well as. So you need to change. I have used the same strategy for 20 odd years, but I have changed the emphasis. Sometimes I'll focus more on fibs or sometimes I'll focus more on EMAs, and I've taken loads of stuff off. I mean, in my early days, as with everybody, I thought I had a wonder system and I back tested and it looked great. And I had about CCI, RSI, volume, MACD, Bollinger Bands, 5-6 different EMAs, etc. And now I use 2 and I use MACD and that's it. So I think that's simpler, but looking always for this multiple reasons and being able to adapt. And ultimately, if you look at the charts in the morning and you're not sure, then walk away, because otherwise you become a busy fool and you end up getting stressed. And at the end of the day, thinking, why the hell did I bother today? And generally, I can tell within 5 minutes whether it's a day to walk away. So I plan everything. So for me, trading is 90% planning. I do it all on a weekend when the markets are shut. So there's nothing going on to get me excited or interfere. And, suddenly everything's moving. And I just plan levels that if things are going to drop and pull back, where do I want to buy for multiple reasons? And then I finally, as far as Forex goes, I do have a fundamental bias. And what I mean by that, and it's not global macro or anything in any depth, but I live in the Eurozone. The Eurozone politically is a mess. Economically, it's a mess. The UK, I'm from England. The UK is a mess. And the current governments in both of them are hopeless. And Trump's come in with a lot of positivity. And the business community, at least in America, are very positive about what's to come. And so you balance the two. And I just focus on the dollar for the last few months. Now we need to see in the next few weeks what happens, because I think all this chaos at the minute is to do with the tariffs and stuff. So we'll see. And finally, actually, I mentioned earlier about crypto. Do not use leverage. A couple of weeks ago when Bitcoin dropped, I think there was $2 billion worth of longs were taken out. And I saw stories of people on Twitter who had made a lot of money from crypto, lost the lot. Because if you use leverage on something that's that erratic, then you can wake up one morning and literally your whole entire account has gone. So leverage for Forex is great, but with crypto, I wouldn't touch it with a barge pole.
One thing you tell traders a lot is about simplifying your strategies, like keeping things very simple. And sometimes you even say that simple could make you even better returns overall. Can you explain a bit more about why something more simple could make you a bit more money or better returns?
I think the thing is when you start and you start with all the software and you read about the indicators, you put them on and you can see, well, this one seems to work. And many indicators in isolation do work. But when you start putting them all together, there's too much going on the screen. And what I've found over the years with teaching people are really good at seeing something afterwards and saying, oh, well, I should have bought there and I should have sold that. And of course, the marketers are really clever because they show you graphs and videos saying, well, if you'd bought here and sold there, you would have made a fortune. But I find when people are learning, especially, they focus just on the current few candlesticks. And you have to look always to the left and say, well, what happened before? Where did this previously bounce and on how many occasions? And a lot of currency pairs bounced on major areas going back to 2002. So if price repeatedly has bounced in an area, the probability is it's probably going to do it. And ultimately, all we are trading, I say all the time, is probability. And if your probability is more than 50% in your favor and everything else lines up, then take the trade. And if it's not and it's 50-50, why would you take that? That's just gambling. And equally, for me, trading off smaller time frames was a terrible thing to do because I just got so emotionally involved in it and made stupid decisions, stupid mistakes. And I was doing a webinar the other day with my mentor, a guy called Rich Friesen, who's a trading psychologist. And he taught me years ago. And we were doing a thing like this where I was trading on a 15-minute chart and went to place the trade. And he just went, stop, what are you doing? And my heart rate's up, my legs are going. And I was just too emotionally involved. And like I said earlier, this is why now I do all the planning on a weekend and I look on a morning and I make a plan in advance what I'm going to do. And for me, trading is 90% planning and 10% execution. I want to place as few trades as possible to make enough money and to be able to walk away. Some people, especially when they're new, like when I was new, want to sit there and do it all day. But nowadays I find it a lot easier. Step back and play the long game is my way of looking. But I say the main thing for new people particularly is get in the habit, and it's very common sense, just look to the left. Where did it bounce before? Why? And then find as many reasons as possible.
Do you see any better time frames for the current conditions? Is it better to go on higher time frames, or do you feel like smaller time frame have a better edge right now in these conditions?
I 10 years ago went to longer time frames. I start on weekly. I mean, we've got the monthly candle close coming, so I always have a look at that. But in general, I start on weekly. I am looking for areas of interest, big areas of interest. I look at 20 odd pairs, and then I go down to daily to try to find what I class as an A-grade trade. And an A-grade trade for me, I can show you, if you like, I can show you a screenshot of what I look for the 5 reasons and what I class to be an A-grade trade. So if that's okay, I'll share my screen. So this is the dollar Swissy. And this is the 5 reasons checklist and talk about probability. And what I explain to folks is the best thing to do is physically write out a checklist and include all of this lot. And so you're looking for trend lines, you're looking for horizontal and diagonal support. I use a couple of EMAs and Fibonacci. Correlation, I look at MACD just as a clue to see whether we're starting to top out. A risk on or risk on environment is what we've got today. So today, Bitcoin's dropping, stocks are dropping, dollars going up. That's classed as a risk-off environment. People are scared of riskier assets, so they're pulling the money back into the dollar. And all of that can help you as well. And I said earlier, my fundamental bias at the minute, I am more pro-USA in terms of positivity and the dollar than I am with the Eurozone and the pound. And then have another side to your list. So on the one hand, have the list and you need at least 5 reasons to tick off. And then what could go wrong? And the opposite of any of the above, to buy in here would have been a really bad decision, because if you look to the left, last time it came up here, it stopped to the pip in that area and it dropped hundreds and hundreds of pips. So the probability when you get up here that it's going to reject is greater than not. And that could keep you out of a losing trade. And again, the more that you can reduce the losers, the more profitable you will be as a trader. And so this was an A-grade trade. In fact, this was an A-grade trade this week, and I've just been taken out because I'd moved my stop too soon. But in here, when you go through your checklist, we're in an uptrend. I have it that we had 61.8 fib, and I only start paying attention to Fibonacci when we get to 50%. It also had the whole number, and I think I've forgotten to put that on here. Whole numbers. They've been really important the last few years. So in here, I had an entry. When you're near a whole number, I always go 10 or 15 pips above the whole number, because often price will come down, touch the whole number, or the EMA, or the fib level, and move away, and you fail to get into the trade because of the spread. And so in here, I had the order at 89.20. I had the stop here, 50 pips away. This was my first area yesterday when I was thinking this is probably going to struggle. And then when it got to 1 to 2 this morning, I've taken some off because I don't know what Trump's going to say when the American market starts. And now I've taken 70% off. I'm leaving the balance to run. And now I will, well, on this one, I moved the stop as I said to earlier. But what I should have done is move the stop in here for the rest of this move. And I could have caught another few hundred pips. I don't normally trade on a Friday, and I was busy today anyway, so that's my excuse. But that, for me, so from a point of view of 5 reasons, I have 61.8 fib, I have the 55 EMA on a weekly, I have the 200 EMA on a daily, I have the trend line, I have the whole number, and I have the risk-reward ratio of at least 1 to 2 and possibly 1 to 4 or 5. So for me, that makes so much sense. And then, as I said earlier, I look every day. I am looking for where is the big money flowing. And the big money flowing today and yesterday has clearly gone back into the dollar. And then everything else has been dropping against it. Okay, so this is Bitcoin today. We've clearly had a big drop, and we broke through the 200 EMA yesterday. I've got levels all the way down where I'm looking. This is the level of 75. I have an order at 76,000. I bought some this morning at 80. And some at 79, I think. Technically, this was in a flag pattern here where we were anticipating and hoping it was going to go on a run higher. A lot of this now is to do with the Trump tariffs, as I said earlier. So I'm looking at the dollar index. The dollar is going up. Everything else is going down. The stock market, the S&P is breaking lower, coming down into 78.6 fib. Until that breaks, I still think it's going to go back up. So today really is a make your mind up day. And same for the NASDAQ. NASDAQ is breaking 78.6. So the next area I anticipate it will probably react for the NASDAQ is around 20,000. And the S&P, I am anticipating it will probably react, if we get through this lot, anywhere around 5.7, 5.8. And then I'm looking at gold, as I've just shown you earlier. Gold has been at all-time highs. And ultimately, if everything else fails and the economies collapse, etc., and crypto collapses, ultimately gold is the safe haven. So I have an order to buy more physical gold at 2,810 today. And I did buy some silver this morning, and I'm in a silver trade at the moment. And when it comes to silver and gold, I buy them for fundamental reasons first, and I use technical analysis to make the decision to buy. Ethereum's down and all the rest of it. So all of that lot is an indication. This for me is my barometer of where things are going today and where I need to focus. And until the US market's open, I'm going to leave the stocks alone.
How do you define your stop losses in these current market conditions? Because I feel like a lot of moves are a bit more aggressive, or there could be wicks that are kind of happening that don't typically happen before, and they can stop you out more easily. Do you have a certain kind of parameter for this where you leave more room, or is it still the same thing as you did before?
So this is the dollar yen. I'm going to cancel this today because I don't like to take trades on a Friday, and certainly don't want to be leaving them over the weekend in view of all the politics we're going on with the Middle East and Ukraine and with Trump. But this was a multiple reasons trade for this week. We're clearly in a downtrend of late, and especially once we've broken this bunch of EMAs in here, I have a decent risk reward on this one. So I'm risking 60 pips for a potential 240 gain. So 1 to 3 risk reward ratio in a downtrend. Another thing I look at is today, this has already done 160 pips. and the average is 148. So the thinking is, if it's going to run out of steam anywhere, it's probably going to run out of steam here. And so in answer to the question about the stop needs to go where the stop needs to go, and for as many reasons as possible that you want to hide it behind. To be ultra conservative of this, I would need to go above the trend line, but then that's a 100 pip stop. And I don't go generally more than 70 pips wherever possible. So as much as possible, that's what I'm looking at. And they say it's all done pre-planned. The pound was a nice trade this week. We took the pound. This was a pullback into this area here. We had shorted in here with the initial stop up here, and then, which is 50 odd pips away. And then as the trade moved into profit yesterday, and after this spike, we moved the stop into here to reduce the risk. Because that's the other thing. Once you're in a trade, an original stop was 50 pips away. So if I'm risking 1%, now I'm only risking 0.25%. And again, I've taken some profit off and I've left the balance to run. So step by step is what I do. I only use these EMAs, and I say I use the longer time frame ones as well. But what I used to have on the chart was insane. So probability, strong areas, and as many reasons as possible are what I'm looking for every day.
How do you find the balance between moving your stop closer to break even versus leaving it enough room for the trade to unfold? Because it could pull back and stop you out pretty quick.
Yeah, well, that's what caught me on the Swissy today, which was my own fault. In general, if I start off with a 50 pip stop and it moves 50 pips into profit, I will, along the way, again, if I've got somewhere strong to hide it behind, for example, this one. So this one initially was a stop down here. Once it set off moving and moving into profit, I would come in behind the EMAs and the whole number. And then when we've got up to here, I start to go down to a 4 hour. And so if I go to a 4 hour chart, you're looking for where it's going to consolidate next. So we've come in here first, then we've clearly consolidated here and set off again. So you can move your stop into here. And then when it's consolidated again, I've gone into here and I got taken out on that one. But that's what I will do. I get it off the daily, but I will sometimes, especially in current markets, manage it from a 4 hour chart. So in theory now I should still be in this thing, but I say because of my own mistake, I'm out. And we all make mistakes all of the time, but hey, the goal is on balance to be profitable. The main thing I say is initially when you're in something, reduce the risk. So I had a gentleman this morning, he's been in the pound for a week or more, and he had left his stop. This was the trade here I just shown you, and I had my stop here. And moved it as I explained. He still had the stop up here this morning, and I'm saying to him, well, hang on a minute, it's already gone 80 pips. You're running the risk that this thing is going to come back and take you out, but you're actually still running the risk of losing money on a Friday. And psychologically, there's nothing worse than being in a winning trade and then losing. And so at the very least, he should have moved his stop in here first and then to here. And again, for me, what I was explaining as well, I used to do, this was my main source of income. I didn't have any other source of income. And so for me, I would rather take a profit and play around with the risk reward ratio. My average win ratio is 70%. That is skewed by the fact that I do take partial profits. But at the end of the day, you need to pay the rent. You need to put food on the table from money in the bank. And there's nothing more depressing than being 100 pips up, $1,000 up, and suddenly waking up the next morning and you've lost. So I find it a lot easier. Take some profit, move the stop to entry, and then as it starts to move down, follow it. You bank profit in, and now you're risk-free in a casino. I mean, at the end of the day, I think anybody can do this. It's a step-by-step process. In an uptrend here, you're just looking for a pullback to buy. In a downtrend, you're looking for a pullback to sell. And you're looking for as many reasons as possible. Here was a multiple reason. Here was a multiple reason. On the way up, probably there was a multiple reason here. And if you're trading from daily and it's too slow for you, then you can go down to a 4 hour doing the same thing. But for me, start at the big picture, look for as many reasons as possible, and sometimes go down to a 4 hour and sometimes manage them from a 4 hour.
One thing that traders have a really tough time with is patience. How to wait for setups, how to hold the trades enough. Tell me a bit more about how you deal with patience, especially when you make this as your own income, like your main income, and you trade full time. You want to get to you want to have the profit faster. You want to get to making more money faster. How do you deal with kind of taking it one step at a time?
Losing a lot of money by trading, over trading, over leveraging, and all the bad habits that you can have. I mean, I did all of them: revenge traded, over leveraged. Get to the point you've lost that much that you just throw it all in, equivalent of throwing it all on number 7 in the casino. I'd say for me, it was get away from the smaller time frames. You hear the thunder? If everything starts flashing and I'm gone. I did a challenge recently for a futures account, and I passed it. I got the badge, but I honestly think that it was gambling. And I have a client who is a wealthy guy, and I taught him to trade years ago, and he was always wanting to trade more. He always enjoyed it and wanted to sit there and do it. And he'd gone off and he was doing well. And then he started trading futures, and he came back to me last year and said, I've just lost 100 grand. Oh, okay. Let's sit with you. So I sat with him and watched what he was doing. And I just said, you're gambling. It's just, you're looking at yesterday's high, you're looking at yesterday's low, and anything a break above and you're in. And it was so emotional. And, you know, you're talking about big money on something, and it's watching a candlestick go up and down. And I'm like, oh, no way on this earth am I going to do this. So for me, as I said earlier, the solution is zoom out, longer time frame. And because I might not take a trade this week on FX, but I've made money on other things. So be selective. Anybody can be a busy fool. And I actually last year, we had a quiet period. I think it was August last year. And we had some new members in Forex Mentor Pro, and they were getting bored. It's like, well, we haven't had a trade. So I day traded for the week. And at the end of the week, I took 10 trades. I had lost money. 3 of the trades broke my rules. Twice I got up during the night to move stops because there was news coming out. And at the end of the week, I was exhausted, and half the bad habits I had 20 years ago came flooding back. So for me, the solution is to go at longer time frames.
Tell me what people can connect with you and reach out after this interview if they want to see what you're doing and maybe learn from you.
ForexMentorPro.com is the best place to go. Folks can join for a month for $69, and if you don't like it, we give you your money back. And I mean, the main thing is the difference with others. I think we get a lot of people come to us when they're on the verge of quitting. They've bought all the shiny toys. They've listened to the YouTube gurus, and as a last, they've got the bug, but they come to us as a last resort. And I have a guy recently said he's been trying for 10 years, and we start them off and say, right, you need a business plan. You need a life plan. You need a trading plan. You need rules. You need structure. And so for anybody, irrespective of what you're currently doing, is be more business-like, be more structured and plan, and you can make money at this.
Thanks a lot, Mark, for the advice you give here and the kind of trades example you showed. I think it's been good and useful for people to go through. Hopefully they can connect with you. We'll put the link below for people to reach out to you, and they can definitely see what you're doing out there. A lot of good stuff. And hopefully we can talk to you again in the future. It'll be a lot of fun.